Imagine waking up one morning to find your bank account balance has multiplied by several thousand overnight. The idea might sound like a whimsical dream, a fairy tale woven of golden threads, but for some people, this has been a startling reality. Welcome to the unpredictable, volatile, yet incredibly tantalizing world of cryptocurrency. In this realm of digital finance, currencies like Bitcoin, Ethereum, and countless others dominate the market. This digital world doesn't adhere to traditional banking rules, government regulations, or physical borders. It is a land of the free, the daring, and the adventurous. It's a new frontier, a wild west of finance where fortunes can be made or lost on the whims of market trends, the shifting sands of algorithmic variables, the mercurial whims of code and data. This is a place where the old rules of finance and economy are unceremoniously tossed aside, replaced by an exciting and unpredictable landscape of risk and reward. In this global arena, a new class of wealthy individuals has emerged, their fortunes hewn the cavernous depths of digital finance. They are the crypto millionaires, marked by their innovation and daring. These are not your typical Wall Street brokers, bound by suits and ties, or Silicon Valley entrepreneurs, shackled by physical infrastructures and traditional business models. They're ordinary people, just like you and me, who saw an opportunity in the infancy of this digital currency revolution and seized it. Some of them are tech-savvy investors who recognized the potential of blockchain technology early on. These pioneers, these visionaries, saw a revolutionary technology and had the foresight and courage to invest in its. Others are risk-takers who threw caution to the wind, dared to dream big, and invested in a new, volatile market with the audacity of a gambler and the hope of a dreamer. Then we have those who simply got lucky, the digital equivalent of a lottery winner. They bought in at the right time, just as the value of their chosen currency began to skyrocket, and watched their investment multiply overnight. And then there are the hodlers, the stalwarts, the ones who, through thick and thin, held onto their crypto assets. These individuals weathered the storms of market crashes, the emotional roller coasters of highs and lows, the gut-wrenching uncertainties of digital finance. The wealth amassed by these crypto millionaires is extraordinary. We're talking about individuals who've turned a few $1,000s into millions, even billions, in just a few short years. This can seem like an astronomical feat, an almost impossible achievement, yet reality has proven otherwise. It's a testament to the power of innovation, the potential of technology, and the courage to embrace the new and the unknown. But it's not just about the money. It's about being part of a financial revolution, a seismic shift in how we think about and use money. It's about changing the world, disrupting the status quo, making a mark on history. It's about taking a leap of faith, daring to dream, and shaping the future. Yet, the world of crypto is not all sunshine and rainbows. It's a high-risk game, fraught with scams, market manipulations, and regulatory uncertainties. Many have lost as much, if not more, than they've gained. The world of cryptocurrency is a savage jungle where only the fittest survive. It's a world where fortunes can evaporate overnight, where dreams can be crushed in an instant. Despite the risks and uncertainties, the world of cryptocurrency continues to allure millions around the globe, drawn by its promises of wealth and novelty. These digital pioneers, these crypto millionaires, have shown us a new path, a new land of possibilities. They've shown us that in a world of digital finance, anything is possible. But for those who've managed to navigate these treacherous waters successfully, the rewards have been life-changing. They've proven that with courage, foresight, and a bit of luck, one can a new path, a new destiny. They've shown that in the world of cryptocurrency, dreams can come true. This isn't a fairy tale, it's the reality for some crypto millionaires. But what's their secret? The dawn of cryptocurrency began with the name Satoshi Nakamoto and a revolutionary idea, Bitcoin. The inception of this groundbreaking digital currency was indeed one that was set to redefine the way the world perceived financial transactions and value. Sometime in the year 2008, a name, or rather a pseudonym, started making rounds in some corners of the internet. The pseudonym was Satoshi Nakamoto. Satoshi Nakamoto, whether that was the name of a person or a group of individuals, would soon be known as the architect of a new era in global finance. He, she, or they, as the ambiguity of the name still remains, introduced Bitcoin, a digital currency that no other. This was not merely the introduction of a new type of currency. It was a seed sown, a pivotal moment that would change the landscape of the world's financial systems forever. Bitcoin was not conceived as a regular currency. It was designed and developed to be a digital currency that did not have to be controlled by a central authority like a government or a financial institution. Unlike traditional currencies, Bitcoin was intended to operate in a decentralized manner. Its foundation was a peer-to-peer network where transactions could occur directly between the parties involved, eliminating the need for middlemen such as banks or financial institutions. At the core of Bitcoin's functionality is a technology so innovative, so transformative, that it's often considered the next big thing in the tech world, the blockchain. You might be wondering, what exactly is a blockchain? Imagine a ledger, a record book. But unlike traditional ledgers that are stored in a single location, this one is distributed across thousands, even millions of computers around the world. Every single transaction that involves Bitcoin is recorded on this ledger. Now, here's the exciting part. This ledger is completely transparent for everyone within the network to view. This transparency, combined with the use of advanced cryptographic techniques, assures that these transactions are secure and, more importantly, immune to tampering. When Bitcoin was first introduced to the world, it's safe to say that it wasn't exactly met with overwhelming excitement. As a matter of fact, it had little to no value. The first known transaction that Bitcoin was used for was a pizza purchase. A programmer living in Florida sent 10,000 Bitcoins to a man in England, who in turn ordered 2 pizzas for him. At that time, those 10,000 Bitcoins were worth around $30. Put simply, Bitcoin was a novelty, a fascinating experiment in digital currency. However, fast forward to today, those 10,000 Bitcoins would be worth millions of dollars. Quite the return on investment, isn't it? The value of Bitcoin started to rise as more and more people began to understand its potential and the profound impact it could have on global finance. Those individuals who adopted Bitcoin early, when it was still undervalued and not fully understood, found themselves sitting on a virtual goldmine as the price of Bitcoin skyrocketed. This exponential rise in value was not a smooth ride. It came with its fair share of peaks and troughs, moments of uncertainty, and even skepticism. But for those who held on to their Bitcoin, who believed in its potential and were brave enough to weather the storm, the rewards were, quite literally, substantial. Bitcoin may have started as a concept, but it soon became a goldmine for early adopters. The rise of Bitcoin has paved the way for the emergence of a new breed of wealthy individuals, the crypto millionaires. But that, dear viewers, is a story for another scene. The first wave of crypto millionaires were those brave enough to venture into the unknown. This world, emerging and unsure, was nothing short of a gamble. It was a world teetering on the edge of a digital revolution, an innovation that would change the very fabric of the global economy. This was a period where an online currency was merely a concept, taking its baby steps into the world of finance. It was a world of uncertainty and skepticism, a world fraught with doubts and disbelievers, a world clouded with questions about its sustainability and longevity. In this world, individuals like Laszlo Hanyecz and Eric Finman chose to step in, throwing caution to the wind and daring to tread into the unexplored. Laszlo Hanyecz, a software developer hailing from the Sunshine State of Florida, became a pioneer when he made one of the first real-world Bitcoin transactions. It was May 2010 when he spent a whopping 10,000 Bitcoins on a purchase as mundane as 2 pizzas. At today's rates, those pizzas would be worth an unthinkable amount. However, back in 2010, Bitcoin was a mere experiment, a novelty, an idea that was still finding its feet in the market. Hanyecz's pizza purchase was a landmark event that put Bitcoin on the map. It proved that this digital currency had the potential to hold real-world value. It was a pivotal moment in the history of cryptocurrencies, a momentous occasion that has been immortalized in the annals of digital finance. On the other end of we have Eric Finman, a teenager with an unusual path to his crypto fortune. Finman was just a 12-year-old boy in 2011 when he decided to invest $1,000 in Bitcoin, a monetary gift from his grandmother. As Bitcoin's value soared in the years that followed, so did Finman's wealth. By the time he turned 18, Finman had become a millionaire, his wealth a testament to his early faith in Bitcoin. his foresight of the potential it held. These pioneers were the first wave of crypto millionaires, individuals who saw potential in a technology that many dismissed as a passing fad. They were the explorers of the digital world, stepping into uncharted waters, betting on a digital currency that was as enigmatic as it was revolutionary. Their stories are a testament to the potential rewards of embracing the unknown and taking calculated risks. In the face of skepticism and volatility, they stared risk in the face and plunged headlong into the world of crypto. Their journey was filled with challenges, each one testing their resolve, their faith in the digital currency. They faced the very real possibility of losing it all, their investment going down the drain, their dreams shattering. Yet they were undeterred. These early adopters were not just fortunate. They were bold, they were visionary, they were tenacious. They were individuals who had the courage to see beyond the present, who had the vision to recognize the potential of an innovation that was still in its infancy. They were individuals who were not afraid to take risks, to go against the tide, to bet on an idea that was yet to prove its mettle. Their risk-taking paid off, but it's not the only way to strike it rich in crypto. Investing in cryptocurrencies is not a guaranteed ticket to wealth. It requires an understanding of the market, a keen eye for trends, and a stomach for volatility. It's a world that rewards the brave, the innovative, and the persistent. But most importantly, it's a world that opens up a realm of possibilities, a world that is constantly evolving and presenting new opportunities. Their risk-taking paid off, but it's not the only way to strike it rich in crypto. Bitcoin may have started the crypto revolution, but it's not the only player in the game. This statement sets the stage for a fascinating exploration of the world of digital currencies, a world that extends far beyond Bitcoin. In the vast landscape of cryptocurrency, Bitcoin may be the tallest mountain, but it is surrounded by numerous other peaks, each with its own unique characteristics and appeal. Just as the advent of Bitcoin opened the gates to a new era of digital finance, it also paved the way for a multitude of alternative digital currencies, also known as altcoins. The creation of Bitcoin sparked a revolution in the financial world, ushering in a new age of digital currencies, and subsequently, a sea of altcoins followed in its wake. While Bitcoin remains the titan of the crypto world, these altcoins are not mere shadows, but significant players in their own right. Each altcoin brings a unique set of features and benefits, making them attractive alternatives to Bitcoin. Through technological innovation, strategic marketing, and a bit of luck, some altcoins have managed to break free from Bitcoin's shadow and establish themselves as viable players in the crypto market. Take Ethereum, for example. This altcoin, second only to Bitcoin in terms of market capitalization, didn't merely follow in Bitcoin's footsteps. Instead, it blazed its own trail by introducing the world to smart contracts and decentralized applications. Ethereum's unique value proposition has made it a favorite among developers and alike. Its platform allows for the creation of decentralized applications, or dApps, which operate without the need for a central authority, offering unprecedented levels of transparency and security. This transformative technology has sparked a wave of innovation, spawning countless dApps with various use cases, from decentralized exchanges to prediction markets. Then there's Litecoin, affectionately known as the silver to Bitcoin's gold. It was one of the first altcoins to carve out a niche for itself, offering faster transaction times and a different hashing algorithm. Litecoin's creator, Charlie Lee, wanted to create the silver to Bitcoin's gold, and that's exactly what he did. He optimized the Bitcoin protocol, reducing the block generation time, increasing the maximum number of coins, and implementing a different hashing algorithm, making Litecoin a faster, more scalable version of Bitcoin. And let's not forget Ripple, a digital payment protocol that also has cryptocurrency, XRP. Ripple's unique approach to cross-border transactions attracted a lot of attention, and not just from everyday investors. The Ripple protocol enables fast, low-cost international money transfers, making it an attractive option for banks and money service businesses. This unique use case has helped Ripple carve out its niche in the crowded crypto market. Enter Chris Larsen, the co-founder of Ripple. As the value of XRP skyrocketed, so too did Larsen's net worth. In the blink of an eye, Larson found himself catapulted into the ranks of the world's billionaires. His story is a testament to the immense wealth generation potential of these altcoins. But as enticing as the altcoin market may seem, it's also one fraught with risk. These digital currencies are highly volatile, with prices that can skyrocket one moment and crash the next. This volatility can be a double-edged sword, offering the potential for massive profits, but also the risk of devastating losses. And while some altcoins have proven to be game changers, others have faded into obscurity, leaving investors high and dry. The crypto market is a high-stakes game of survival, where only the fittest survive. Many altcoins have come and gone, their names forgotten, their technology obsolete. Only the ones that continuously innovate and adapt can hope to stand the test of time. So, as we navigate the exciting world of crypto, we must remember that while Bitcoin may have started this revolution, it's not the only game in town. Altcoins, with their unique propositions and potential for high returns, offer a wealth of opportunities for those willing to take the risk. However, they also come with their own set of challenges and uncertainties. As with any investment, it's crucial to do your homework, understand the risks involved, and never invest more than you can afford to lose. Indeed, the world of crypto extends far beyond Bitcoin. Each altcoin brings something unique to the table, and with that uniqueness comes the potential for reward, but also risk. For those willing to navigate the volatile waters of the crypto market, the potential rewards can be substantial. Altcoins provide more opportunities for investment, but they also come with their own risks. Patience, they say, is a virtue. In the world of crypto, it's also a wealth-building strategy. Let's unravel the concept of hodling, a term that at first glance might seem like an egregious typographical error of the word holding. But in the tempestuous waters of the cryptocurrency ocean, this term has a much deeper connotation. It has emerged from the heart of the unpredictable and highly volatile cryptocurrency market. The term HODL is an acronym that stands for Hold On for Dear Life. It is a term that born amid the wild price swings that are characteristically associated with digital currencies. Hodling embodies an investment approach where cryptocurrency holders remain resolute and do not sell their holdings irrespective of whether the market is soaring or plunging. It is quite intriguing to understand how hodling came about and the procedures behind it. So let's embark on a voyage back in time, precisely to the year 2011. At that time, Bitcoin was in its infancy, just 2 years old, and was trading at a relatively meager price of around $7. The digital currency was still a neophyte in the world, and not many envisaged the revolutionary potential it held. Enter stage, the Winklevoss twins. If their name rings a bell, you've probably heard of them from the Facebook saga, where they were embroiled in a legal spat with Mark Zuckerberg. These twins, Cameron and Tyler Winklevoss, are Harvard-educated entrepreneurs who saw tremendous potential in this relatively obscure and nascent digital currency. Stretching their financial muscles, they made a significant investment purchasing approximately 100,000 bitcoins. Pondering on that number can be quite mind-boggling. It's one followed by 5 zeros, a staggering quantity indeed. As the price of Bitcoin underwent numerous fluctuations, undergoing dramatic rises and precipitous falls, many investors would have been tempted to sell. The thought of cutting their losses during times of price dips or cashing in on their investments during price surges would have crossed the minds of many Bitcoin holders. However, the Winklevoss twins held their nerve. They exhibited remarkable resilience and steadfastness. They did not waver. They hodled. When Bitcoin reached an all-time high of nearly $20,000 in the year 2017, their investment strategy paid off spectacularly. Their decision to hodl had propelled them into the exclusive club of billionaires, an astonishing return on investment. If they had been swayed by the market's volatility and had decided to sell Bitcoin first doubled or even tripled in value, they would have still made a profit. However, by deciding to hold on, by choosing to HODL, they made not just a profit, but a jaw-dropping fortune. So, what significance does this hold for you? Does this mean you should follow in the footprints of the Winklevoss twins and HODL too? Answer to this question isn't straightforward. Each investment strategy is accompanied by its unique set of risks and potential rewards. The strategy of hodling is no exception to this rule. It demands patience, an unwavering belief in the long-term value of cryptocurrency, and most importantly, a strong stomach to tolerate the high levels of volatility. Hodling might not be a suitable strategy for everyone. It's not a one-size-fits-all approach. But for those who have a robust risk appetite, have faith in the future of digital currencies, and can weather the storms of market ups and downs, the potential rewards can be substantial. There's a world of possibilities in the realm of cryptocurrency, a domain that is still in its early phases and teeming with opportunities. It's a vast playground for those willing to be patient and persistent. We can't all be Winklevoss twins. We can't all have their financial resources or their knack for identifying game-changing opportunities. We can certainly learn from their example, from their investment strategy, and the principles underpinning it. Hodling may require nerves of steel, but it has proven to be a profitable strategy for many. While some crypto millionaires are made by holding on, others are made by knowing when to buy and sell. Indeed, we're stepping into the high-octane, nerve-wracking world of cryptocurrency trading. This is a realm that is not tailored for the weak-willed or those who can't stomach risk. Broadly speaking, it's an environment where the potential rewards are so immense, they're nearly beyond comprehension. Picture this. The year is 2012, and a sharp young trader named Alex stumbles upon Bitcoin. He is captivated by its revolutionary potential and decides to plunge right into it. The lure of this digital currency pulls him in, and he starts buying as many Bitcoins as his finances allow. But Alex isn't just another investor who buys and holds. He develops a strategy, one that involves keeping a vigilant eye on the market, making purchases when prices take a dive, and selling when they rocket upwards. Alex isn't just passively investing in crypto, he is actively trading it. His approach is a blend of precision, calculation, and a deep understanding of market trends. His strategy isn't without risk, but it's one that reaps handsome rewards. Within a span of just few years, Alex morphs his humble investment into a substantial fortune. He's no longer just a Bitcoin investor, he's a bona fide crypto millionaire. His wealth is a testament to his ability to read the market and time his trades just right. However, the realm of crypto trading isn't just about the art of timing when to buy, when to sell, and when to hold. It's about understanding intricacies of market trends, the knack to analyze charts, and the capacity to make calculated decisions. It's a game of precision, patience, and fortitude, and it's definitely not meant for everyone. But for those who can master it, the rewards are beyond spectacular. But let's not paint an overly romantic picture here. Crypto trading is a high-risk game. Prices can swing violently at the drop of a hat, and if you're not careful, you could end up losing everything. It's absolutely imperative to do your due diligence, to have a thorough understanding of the risks involved, and to always invest only what you can afford to lose. It's also worth noting that while crypto trading can lead to astronomical gains, it can also result in devastating losses. Trading responsibly, therefore, becomes an essential mantra. While the potentially sky-high rewards can be undeniable, it's equally important to be cognizant of the high risks involved. Yet for Alex and countless others like him, the allure of the potential rewards outweighed the risks. They saw a golden opportunity, seized it, and amassed their fortunes in the process. Trading may be fast-paced and risky, but for some, it's the path to becoming a crypto millionaire. It's a journey that requires finesse, strategy, and an appetite for risk. But for those who dare to tread this path, the rewards can be life-altering. It's a world where every decision counts, where every trade could spell the difference between unimaginable wealth and crushing loss. It's a world filled with volatility, uncertainty, and the thrill of the unknown. But above all else, it's a world filled with the promise of untold riches. A world where the ones who dare to dream big and take risks could turn those dreams into reality. In the hunt for the next Bitcoin, many have struck gold in initial coin offerings, also known as ICOs. They have proven to be a modern-day gold rush for some, a unique opportunity to potentially accumulate substantial wealth. In the evolving financial landscape that is the cryptocurrency market, ICOs have emerged as a significant player. Now, if you're relatively new to the world of cryptocurrency, you might be wondering, what exactly is an initial coin offering anyway? An ICO, or initial coin offering, is essentially a fundraising methodology exclusively used in the cryptosphere. It's a platform that allows new crypto projects to raise capital by selling their very own crypto tokens in exchange for established currencies like Bitcoin or Ether. You can think of it as the crypto equivalent of traditional stock initial public offering, IPO, but with a twist. Unlike IPOs, ICOs operate with less regulatory oversight, which makes them a double-edged sword. On one hand, they offer a higher potential for exponential gain, a tantalizing prospect for any investor. On the other hand, they expose investors to greater risks. ICOs are, in essence, speculative investments. The absence of regulation or oversight means there is always a risk involved, making this a high-stakes game of risk and reward. In the last few years, ICOs have played a pivotal role in the exponential growth of several cryptocurrencies. They've acted as a catalyst, propelling many projects from obscurity to mainstream recognition. They've built empires out of startups and made millionaires out of average individuals. Some investors, especially those who have managed to get in early on a project with massive potential, have been rewarded with returns that rival those of traditional venture capitalists. To fully comprehend the potential of ICOs, let's take a closer look at an investor named Alex's story. Alex is an everyday individual with no notable distinction from the millions of others who have ventured into the world of crypto. In 2017, he heard whispers about a promising new project called Ethereum. Ethereum was planning to raise capital through an ICO, offering their Ether tokens at a bargain, mere cents. Intrigued by the audacious aims of the project, Alex felt compelled to participate. He decided a leap of faith, putting a modest sum into Ethereum's ICO. His decision was driven by curiosity, anticipation, and a sense of adventure, all common traits among enthusiastic crypto investors. Fast forward to the present day, and that modest sum has multiplied exponentially, transforming a considerable fortune, courtesy of Ethereum's unprecedented growth. But it's worth noting that it wasn't just pure luck that led to Alex's success. Alex was methodical and thorough in his approach. He spent countless hours researching Ethereum, understanding their vision, and scrutinizing their blueprint. He recognized the revolutionary potential of Ethereum's smart contract technology. He saw the value in the team leading the project, believing in their ability to bring their vision to life. This is the secret recipe to succeeding with ICOs: diligent research, a sharp eye for potential, and a healthy dose of risk tolerance. It for the faint-hearted or those looking for guaranteed returns. It requires time, effort, and most importantly, the willingness to take calculated risks. Despite the success stories, it's vital to bear in mind that not all ICOs result in victories like Ethereum. The landscape is peppered with many failed projects and scams. For every Ethereum, there are countless other projects that never took off, leaving investors with nothing but regrets. The lack of regulation in ICOs allows for manipulation and fraud, making it a high-risk investment. Yet the inherent risk is also what makes ICOs potentially lucrative. With high risk comes the potential for high reward. Participating in an ICO can be a bit like buying a lottery ticket, but for those who strike gold, the returns can be life-altering. It's a gamble, no doubt, but one that has proven to be worthwhile for a lucky few. As we delve into the world of ICOs, there's one crucial piece of advice to remember. Never risk more than you're willing to lose. Whether you're a seasoned investor or a novice, this principle holds true. The world of ICOs is exciting, dynamic, and potentially rewarding, but it's essential to invest responsibly. Despite the allure of exponential returns, it's crucial to keep in mind that in the world of ICOs, as with all investments, never risk more than you're willing to lose. As with any form of wealth creation, the world of crypto has its share of pitfalls and dangers. Delving into this unique realm, it is vital to understand that just like any other lucrative venture, cryptocurrencies are not a guaranteed path to riches. It has been likened to the gold rush era, where prospectors were drawn by the allure of striking gold. Similarly, the crypto landscape is filled with tales of sudden billionaires, but it also harbors a dark underbelly of risks and challenges that cannot be ignored. One of the most pervasive of these challenges is the prevalence of scams. These come in various forms. The infamous pump and dump schemes, for instance, have become a notorious aspect of the crypto environment. Here, manipulative players artificially inflate the price of a cryptocurrency through false and misleading positive statements. The price rises as unsuspecting investors buy into the hype, and once the price is high enough, the fraudsters sell off their holdings, causing the price to plummet and investors to suffer hefty losses. Another form of scam is the fraudulent initial coin offerings, ICOs. As a form of crowdfunding, companies can raise capital by offering investors units of their new cryptocurrency in exchange for more established ones like Bitcoin or Ethereum. However, many have used this platform to swindle investors, raising millions and then disappearing into thin air. Even seasoned investors are not immune to these deceptive practices. In a world where a single tweet from an influential figure can send a coin's value spiraling, it's easy to see how someone can fall victim to a well-orchestrated scam. These scams not only tarnish the perception of the crypto market, but also lead to massive loss of wealth within an incredibly short period. Beyond scams, another inherent risk factor of the crypto market is its extreme volatility. Cryptocurrencies are known for their dramatic price swings. Prices can skyrocket or plummet within a matter of hours, fueled by elements such as speculation, market sentiment, news and announcements or tweets from influential. This volatility, while attractive for its potential for high returns, can also lead to devastating losses. As such, investors need to be prepared for this uncertainty and must not invest more than they can afford to lose. Regulatory issues also pose significant challenges in the crypto world. Governments worldwide are struggling to understand and regulate this new form of currency. The rules and regulations pertaining to cryptocurrencies can change rapidly and drastically. One day, a country might fully embrace the idea of a decentralized currency, and the next, they might impose a complete ban on it. These regulatory shifts can profoundly impact the value of your crypto assets and can even lead to your assets being rendered worthless overnight. The technological complexities of cryptocurrencies present another set of challenges. The world of crypto is built on complex technologies like blockchain and cryptographic techniques. These can be intimidating for newcomers and even some seasoned investors. Managing private keys, understanding how blockchain works, keeping up with hard and soft forks in the blockchain, dealing with the intricacies of smart contracts, and understanding the difference between various types of tokens can all be quite challenging. A single mistake, such as losing your private key, can result in the loss of your entire crypto fortune. Despite these risks, the allure of crypto remains strong. The potential for high returns, coupled with the thrill of participating in a groundbreaking technological revolution, continues to attract individuals from all walks of life. There's an undeniable allure to being at the forefront of a potentially world-changing technological advancement. However, it's crucial to approach with caution and a thorough understanding of the challenges and risks involved. It's always wise to conduct diligent research, diversify your investments, and most importantly, invest only what you can afford to lose. It's also beneficial to keep up to date with the latest news and developments in the cryptocurrency world and to be aware of the legal and regulatory changes in your country regarding cryptocurrencies. Remember, just as with any investment, it's critical to do your homework and understand what you're getting into thoroughly. Understanding these risks is crucial to navigate the treacherous yet potentially rewarding seas of cryptocurrency. The crypto landscape is ever evolving, and staying ahead of the curve could be your ticket to becoming the next crypto millionaire. As we move ahead, we step into an era of digital currencies that's unlike anything we've seen before. An era where a single tweet can cause a frenzy in the market, and an era where a new form of financial freedom is just a fingertip away. Crypto is not just a trend, it's a revolution. But what exactly lies in the future of this revolution? What will this fast-paced, high-risk, high-reward world look like a few years down the line? Let's unravel this mystery step by step and take a plunge into the future of crypto, a future that's already unfolding before our very eyes. The next big wave in the crypto sphere is DeFi, or decentralized finance. This revolutionary concept aims to replace traditional banking systems with a trustless, open-source, and permissionless financial service ecosystem. But what does this mean, and what are its implications for you, the ordinary investor? In simple terms, DeFi is a system that aims to recreate traditional financial systems, but without the need for intermediaries such as banks or brokers. Imagine a world where you can borrow, lend, or trade assets without needing a bank or a middleman. DeFi is reshaping our financial landscape, bringing financial services to the unbanked and providing an alternative to the traditional banking system. With DeFi, the power lies in the hands of the people, not institutions. It's a revolution that's pushing the boundaries of what's possible in the financial world. Now, let's turn our attention to another fascinating aspect of crypto, NFTs or non-fungible tokens. These digital assets represent ownership or proof of authenticity of unique items or content on the blockchain. But let's break it down a bit. What does non-fungible mean, and why is it significant? Fungibility is a property of goods or assets whose individual units are interchangeable. For instance, one Bitcoin is equivalent to another Bitcoin, just as $1 is equivalent to another dollar. Non-fungible, on the other hand, means that each token has a unique value and cannot be replaced with another. This unique value proposition has made NFTs a hotbed for digital art, virtual real estate, and other unique digital commodities. Artists, creators, and collectors alike are finding value opportunities in this new asset class. But the NFT space is still in its infancy, and its potential for growth is immense. It's like the early days of the internet, vast, untamed, and full of potential. We're just scratching the surface of what's possible with NFTs, and the future looks exciting to say the least. Despite the buzz around DeFi and NFTs, the future of crypto doesn't stop there. Blockchain technology itself is evolving at a rapid pace. We're seeing advancements in scalability, interoperability, and privacy, to name a few. These developments are paving the way for more efficient and secure blockchain networks, opening up a myriad of possibilities for new applications and use cases. Furthermore, we're seeing governments and institutions around the world showing increasing interest in blockchain technology and cryptocurrencies. This growing acceptance and integration of crypto into our mainstream financial systems point to a future where crypto is not just an alternative but a standard. A world where digital currencies are as commonplace as physical ones. A world where the blockchain is the backbone of our financial system. So, what does this all mean for you? It means that now is an exciting time to be involved in the world of crypto. With so many developments on the horizon, the opportunities for investment and wealth creation are vast. But remember, with great reward comes great risk. So tread carefully, educate yourself, and make informed decisions. In conclusion, the future of crypto is bright and full of endless possibilities. We're standing at the brink of a revolution, and it's up to us to seize the opportunities it presents. The world of crypto is dynamic, ever-changing, and full of potential. As we navigate this journey, let's remember the wise words of Benjamin Franklin: an investment in knowledge pays the best interest. And finally, let's remember this: in the dynamic world of crypto, the opportunities for wealth creation are endless. So what does it take to join the ranks of crypto millionaires? Well, as we've delved into the intricate details of this enigmatic world, we've a variety of strategies that have proven to be successful for many. These strategies are the keys that unlock the treasure chest of the crypto world. Yet, they aren't simple shortcuts, but intricate paths that require understanding, patience, and strategy. Remember, it's a journey, not a race. The first strategy we explored is the power of early adoption. In any innovative sector, the early bird catches the worm, and this is especially true in the realm of cryptocurrencies. Those who had the foresight, the courage, and the belief to invest in Bitcoin during its nascent stage are now looking at the world from the peak of a financial mountain. They had the vision to see the potential, the staying power to withstand the skepticism, and the tenacity to hold on through the roller coaster ride of market ups and downs. But remember, it's not just about being first. It's about recognizing potential in the uncharted territories. The crypto world is constantly evolving, with new cryptocurrencies emerging all the time. Each one brings with it the promise of new technology, new potential. The next Bitcoin could be just around the corner, shrouded in the mist of the unknown, waiting to be discovered. Next up on our strategic journey, we've understood the power of diversification. The altcoin explosion has blown open the doors to a vast universe of cryptocurrencies that exist beyond the realm of Bitcoin. It's like venturing into a cosmic gallery with an array of twinkling stars, each representing a different crypto opportunity. By diversifying your investments, you spread your risk across this vast array of assets. It's like sowing seeds in different fields, increasing your chances of a healthy, the more fields you sow, the more chances you have of striking gold. Then we delved into the power of the simple yet profound strategy of hodling, an acronym for holding on for dear life. It's a strategy that requires a stoic resolve, patience that can outlast a glacier, and a strong stomach to weather the wild tempest of the market's highs and lows. It's a strategy that stands the test of time, as history has often shown us. Those who've held on to their investments through thick and thin, through bullish peaks and bearish troughs, have often emerged victorious, their patience rewarded with a sizable fortune. We've also ventured into the high-paced, adrenaline-fueled world of crypto trading, the art of timing the market. It's a high-risk, high-reward strategy that requires a deep understanding of market trends, an insight into psychological market movements, and the ability to make quick, calculated decisions. It's like surfing on the waves of the market, riding the crests, avoiding the troughs, always staying ahead of the curve. Then, there's exciting, promising, yet precarious world of initial coin offerings, or ICOs, the digital gold rush of the 21st century. Investing in an ICO can be a bullet train to riches, but it's not without its risks. The terrain is fraught with potential pitfalls and uncharted territories. It's crucial to do thorough research, to understand what you're investing in, to know the people behind the offering, to understand their vision, their capability, and their integrity. Due diligence is not just a best practice here, it's a survival tool. The understanding of risks is paramount in any investment strategy. And in the ever-changing, often volatile world of crypto, it's even more essential. The dark side of the crypto world serves as a stark reminder of the potential pitfalls. It's a mirror held up to the world of investment, reflecting the risks, the losses, the failures. It's a reminder of the fact that while there are riches to be made, there are also fortunes to be lost if not navigated carefully. And finally, we come to the strategy that's often overlooked but is as crucial as any other: staying updated on the emerging trends. The future of crypto isn't a static picture, but a constantly evolving, shifting landscape. To stay ahead of the game, you need to keep your finger on the pulse of the industry. Be aware of the shifts in technology, the changes in market sentiment, the legal and regulatory updates. Knowledge is power, and in the crypto world, it's your most valuable asset. Remember, there's no guaranteed path to crypto riches, but understanding the game can certainly tip the odds in your favor.